Hello, everyone, and welcome back to the Wilson Wealth Show. I'm your host, Ciera, and today I'm joined by Maurice and Ablavi. How you guys doing today?
Doing excellent. Glad to be back.
Yes, everybody should know Ablavi hasn't been on the podcast for a while. If you've been listening, you know. So welcome back, Ablavi. We missed you so much.
Aw, thank you.
Yeah, definitely. It's been good. I think Ciera and I have done, pretty good, and always welcome to have, three's company, if you will, and get the party started.
Oh yeah. Well, it was a little tough without Ablavi. Let's not lie. Let's not lie here. We were struggling just a bit. Ablavi's the glue that keeps us all together. We can agree on that.
There you go. I like that. The glue of the show.
Yes, she is.
Yeah, Elmer's or the cheap Walmart.
Obviously, the good glue, Maurice. Elmer's only. Come on.
Welcome to the Wilson Wealth Show, a thought-provoking show about building wealth in the new economy. Each week, members of the Wilson Wealth team and their guests will discuss how to navigate the world of personal finance, stocks, real estate, and entrepreneurship to help you build wealth in the new economy. And now, here is your host, Ciera McCosh.
All right, guys. Well, let's go ahead and jump in today's topic. We are discussing the insanity that is the current housing market here in the U.S. For those who don't know, the housing market is seeing all-time record-breaking statistics across the board. Home prices are at a record high, inventory is at a record low, percentage of homes selling above the asking price is at a record high, and the average time on market is a record low. Have you guys been following this?
I live this with my clients, actually. For clients spending $700,000 or less, the market is extremely competitive. And you guys know why it's not as competitive in that $700K or above price point, right?
Less people.
Exactly.
With that type of money, which is kind of what Ciera and I talked about in the last podcast about couples and the marriage tax.
Oh yeah.
That $700K that you can't fake that mortgage. You can lease a car, you can't lease a house at 700,000 plus.
No, absolutely. So let me be clear. I'm not saying that there is no competition in that luxury market. What I am saying is in the suburbs of Atlanta, where I'm an agent, there is not as much competition. So for instance, for a buyer purchasing a home for $400,000 or less, there might be 20 offers, right? Whereas a buyer purchasing a home for $700,000 or more, there might be 1 to 3 other offers. Keep in mind, it's been a seller's market for several years. And what that means is that if no other homes were put on the market, it would take 6 months or less to sell all the homes that are currently on the market. And in a buyer's market, it would take 6 months or more to sell all the homes on the market. But in this market, at least in the Atlanta area, homes are selling in 7 days or less. And in a lot of cases, it's more like 24 to 72 hours.
Wow. But for those who don't know, let me go ahead and explain why this is happening and why this situation is so unique. So according to a piece that The Atlantic did on this, millennials are the largest generation in American history, right? So having been too financially constrained to buy houses at a normal rate in the previous decade, many of them are now storming into the housing market. Some might feel a desperate need to escape their current apartment, basement, or home after the coronavirus pandemic closed much of the world for more than a year now and led to an outbreak of mind-numbing cabin fever. I'm sure we can all relate to that. And to make things even wilder, home buyers are flush with cash after a year in which the national savings rate soared to its highest level in decades. On top of that, all interest rates having basically declined for most of the past 40 years, recently touched new lows, luring more buyers into the market and encouraging higher bids. So, to me, this makes complete sense why we're seeing record highs and lows in all departments. Is this surprising to you, Ablavi, being our real estate agent?
Yes, it's surprising to me because it's so extreme compared to what we as agents have seen in prior years. It didn't just become a seller's market. It was a seller's market back in 2018 when I got into real estate, but never would I have imagined that it would come to this. literally builders can't build new homes fast enough. And it's getting to the point where some aren't even paying real estate agents, or if they are, they're lowering their commissions because there's so much demand. It comes down to supply and demand. When demand is high, prices go up. This is a great time to sell, but once you sell, where are you going to live?
Right, exactly. What about you, Maurice?
Well, I mean, you said something in there that about the millennials, and today, I mean, this came across my desk on the Financial Advisor, kind of the news wire that we follow, and they were saying that millennials are the wealthiest generation. And they said, yes, they have debt, but that's student loans. That's not the 1980s credit card debt, and they also have higher liquid assets. So I'm looking at a chart here where they tend to have 25% more between the ages of 26 to 39 than their parents did a generation earlier. And this is due to the retirement account. And what's significant about that is it's one thing to have, let's say, 50,000 in the bank, you're a good saver, versus 50,000 in the market. And that 50,000 has a higher ceiling year over year than that 1% to 2% you're getting at the bank. So not only do they have more financial assets, the growth of those assets will supersede that of their parents. Most boomers started, investing, if you will, in the late 80s, just before the internet got going. So, and a lot of them just did it as an afterthought. So these, I won't say kids, but millennials have been investing right out of college with their first job, and they're more educated. So I think a lot of that is also driving it. We tend to malign millennials and not give them some credit for what they've done. So they've got the money, they've got the numbers, the suppliers are out of alignment with what's going on. And I hear a lot about people want to rent. I think that's a prisoner of the moment thought. Everybody wants to own eventually, because renting always invites instability in who your next door neighbor is, what your rent's going to be. You're young, but you're older longer than you are young. A switch goes off and you're like, hey, I want something for my kids. I want a backyard, things of that nature. So the suppliers need to get with this generation, because that is also, in my opinion, like Ciera said, driving these problems in real estate.
Wow. That's crazy. I never really considered, you always hear about how millennials are doing so bad, just awful, like 90% of the time. It's really interesting to hear that we're doing something right.
I can tell you my earliest millennials, particularly, people, whenever I give numbers, people say, well, Maurice, you're talking to a certain type of client. I get it, but they're out there, right? And so I would say some of my just clients coming out, of course, it's STEM. They were able to reach six figures in assets fairly quickly. And this is before the pandemic. This is going almost shortly after the real estate crisis back in 2008. They were able to ramp up to 100,000 really quickly. And that was, almost 10 years ago. Lord knows where they are today. And those would be the older millennials, the ones that are trending closer to that 39, but they would be the ones that would be looking for houses, right? You move out of the city, you get to the suburbs, you got the two kids, the cars, all that stuff. And so, I've seen it firsthand that the younger clients do have the assets along with the student loans, but how's that any different than carrying a mortgage for our parents or my parents when they were 25? You got maybe a $50,000, $70,000 mortgage. That's your debt. So for these kids, it's the student loans. So, but they got the assets too.
And think, if we get that student loan forgiveness, then we're going to be doing real well. We're going to be doing great.
I hear so much about that. People, that's going to be polarizing. Because for me, I put it in the context of if you have a problem with student loan forgiveness, which I don't, but I understand the optics of it. What I would do is say, okay, put a chart up of the subsidies you've given to the oil and gas industry well past the time that they needed subsidies, or put up a chart of what you give them to the military. And if what we're doing for student loans, approaches anything close to what they've done for those industries, then we can have a conversation. I would imagine that what they want to do for student loans, because it won't be an absolute forgiveness, it may be a retirement of like 50% of what you owe, which nobody would reject. I just think we got to put what we want to do for the students in context of what we've done for everything else. Airlines, auto industries have gotten bailed out. We're supporting oil and gas. We're always upping the military budget, absent of any real wars. So what is the problem here with helping the students if we're a consumer-based economy and these guys make up the future and the present day middle class? So, let's put it in context. Let's look at it and let's have a real conversation instead of saying, oh, we're going to have moral hazard and people are going to borrow more than they should. Like, look, that was real estate, right? That going up. Oh, wait, you would give them low interest rates. So we know like this is no different. We can control it. We can fix it. We can put some parameters around it, but we shouldn't dismiss it out of hand. So yeah, let's get the student loan forgiveness. Let's get it going. Let's go.
Oh, all right. All right. You know what? We're going to put a pin in that because I think that would make a great podcast.
Yeah, I think so too. And bring on some students. Some pro.
Yeah, let's do it. Yeah. Let's do it. All right. So I will say another point brought up is the supply issue that we're seeing. Did you hear about how crazy lumber prices are right now? How expensive it is?
Yeah, absolutely. It's so bad that construction supplies are getting stolen at new home sites. According to a recent news broadcast from Fox Atlanta on June 14th, David Cox of Peach State Lumber said, coming out of COVID, the mills didn't have enough labor, not enough logs to make material. Once they get it, it takes 6 to 8 months to produce the lumber. Of course, with people stuck at home for a year, many started doing projects around the house and demand went up. And then, boom, here we are with everybody and their cousins wanting to buy a house and only a handful of people selling. And thus you have your home supplies aren't even safe for your home to get built.
Yeah.
No sense.
It's insane.
Hide your kids, hide your wife. It's no different than the last recession when we came out of that. I think going into it, they were stealing was it copper off the air conditioning units? There was something they were stealing, a commodity.
No, it was the copper. It was the copper wiring. Yeah, you're right.
I just wish I knew when these super cycles were coming because I would steal it from my own self and just have it on sale. Hey, you don't have to steal it. Let me give you a deal and sell it to you. Everybody's got some stuff they want to throw away that's worth that. And I mean, this has nothing to do with it. 90s fashions are coming back. You should start as a rule saving all your old clothes because just saying like I was telling my daughter, so I have a point with this. Don't throw anything away that because people will eventually want to buy it. A pile of lumber meant nothing to anybody in February 2020. Now it's a gold mine, right? So I mean, so you never know.
You're not wrong.
Yeah. So instead of tossing it, you may want to find a place to store it and then pull it out and sell it. So all I'm saying is, I wish I knew that lumber was going to go on, become a premium commodity. I would have held on to some things. Yeah. Mm-hmm.
Yeah. It sounds like the hoarders had it right. We messed up. Yes, but no, it really is insane. I mean, the lumber prices are so high right now that many companies have completely halted housing construction until it goes back down. So new homes are being built, which is great. And that's also not great considering all construction was halted for a year during lockdowns. Like nobody was building anything in 2020. So the industry was already behind and now there's barely any new construction going on. The supply cannot meet the demand, which is skyrocketing prices, and homes are selling like hot cakes.
My advice to my clients is if you are not prepared to offer up $20,000 and sometimes more, depending on the house, you should wait to purchase. Yeah. It's just really that simple. And of course, that's unique to the area that I'm in, which is the Atlanta area.
Right.
Conversely, though, if you want to sell your home, this is definitely the time to do it. You just need to have a strategy afterwards to make sure you don't end up homeless.
Right. Like I know personally. So my parents moved late last year, and the only reason that they got the house they got for such a decent price was because someone else had closed on the house at the start of the year, but pulled out right when the pandemic started. Did you experience a lot of people backing out of houses last year?
I actually didn't experience that.
Mm,
But it's not uncommon for buyers financing to fall through for any number of reasons.
mm.
When this happens, some sellers become more flexible, especially if it's close to closing and things fall through. I have a deal I'm working on now that the seller's first offer fell through the day before closing, and the house went back on the market. After the house went on the market, my client was the first to put in an offer and it was accepted. This is not the norm in this market, of course. So after due diligence,
Oh, Blavy, can you explain what due diligence is for those who don't know?
sure. So that's a designated period where the buyer has the option of doing an inspection. During due diligence, my client asked for the price of the home to be lowered by 12,000 because there were some things that needed to be fixed. And I thought for sure that the sellers would not agree, particularly since there were other buyers interested in that house. But they not only agreed to lowering the price, they also agreed to paying $600 for her home warranty as well.
Wow, really? Okay. So are you able to tell us the price of the house then?
Yeah, so it was listed for 400,000 and her initial offer was 420. And again, like after being aware of the things that needed to be fixed, she asked for a decrease down to 408. And my point in saying this is that if you encounter the right seller at the right time, there might still be room for negotiation, even in this crazy real estate market. But at the same time, that was a risk my client took because the sellers could have rejected her request. Then we would have been right back where we started in terms of looking for houses again. And then also a new trend with sellers is asking to stay in the home after closing date.
Interesting.
Almost definitely. That is like the norm now. You can have sellers asking for anywhere from a couple of days to up to a month. And of course, during this time, the buyer's footing the bill. So that opens up a whole nother can of worms. But guess what? Buyers are agreeing.
Weird.
Why? Because they want that house.
Interesting. Something very similar happened. My mom's friend stayed with us for a couple of weeks because something got messed up and her house was sold too early and they just like wouldn't let her stay in there. So I find that really interesting that you just brought that up and we just had that happen. Like she was out for 2 weeks and just like didn't know where to go. Like it's crazy out there right now.
Absolutely. This is not a market for the faint at heart.
Oh
Not.
God. Yeah. So it is super crazy how much has changed in a year. Now we're seeing such a boom in the industry. A lot of people are speculating if it's going to crash or not. There's a lot of debate and a lot of opinions, and obviously we cannot know for sure until it happens. But I will say Bill McBride, an economic writer who famously predicted the 2007 crash, said, and I quote, "In my time studying house markets, I've seen bubbles and I've seen bursts, but I have never seen anything quite like this. It is a perfect storm." So he mentions bubbles, which I've heard you talk about quite often with the stock market, Maurice. Can you explain what that means?
Oh, definitely, definitely. And the bubble, this is Maurice Wilson's. This is the Wilsonpedia definition, but yes, yes, coming to a server near you.
Oh God.
The bubble occurs when hype and reality create a virtuous buying cycle that keeps the prices of an asset rising until eventually all the buyers dry up. And the buyers dry up for any number of reasons. And when the buyers dry up, the cycle unwinds or the bubble bursts. So right now we're seeing this with cryptocurrency. And what I mean by hype and reality is that people hear all these things about cryptocurrency. And so they dismiss it until like their buddy gets in on it or their friends at work and they see somebody they respect making money doing it. And then they get in it and then they themselves make money. So it starts to feed on itself like, man, I'm making money. You're making money. We're making money. It's the hype and the reality just feeding each other. And then eventually, for whatever reason, people stop buying. And when they stop buying, then the reality sets in that it's over and they start heading for the exits. In my opinion, right now, housing is not in a bubble. Cryptocurrency was in a bubble because unlike if you go back to the housing bubble of 07, 08, really starting really in 03 with the economy finally bottoming after the dot-com crash, there wasn't a supply issue in that bubble, right? what you found with people, like when that bubble crashed, what do you remember? What you would ride around the suburbs, and what would you see? Unfinished neighborhoods, right? Hey,
Right.
you visit a friend, you run over that pothole because they hadn't finished the road, and so that pothole cover, or what do they call that, sewage cover, was like raised up, so your car would then bend the rim. I used to hate that. Rocks would be under your car because all the gravel from the construction sites was just left undone. That's not a supply crunch. That's a demand crash. Remember, the buyers dry up. Cryptocurrency didn't have a supply. Well, theoretically, they have a limited number of coins, but the way this thing is gone, people can create coins in their dorm room and sell them, and they were making money. To me, cryptocurrency is in a bubble that probably has burst for right now, and cryptocurrency has burst before. It burst back in 2017, 2018.
Right.
But this housing thing is fundamentally a supply issue. You have a lot of demand and not a lot of supply. And so that's the way a market's actually supposed to work. I don't hear many flippers in this market. I don't see a lot of shows about somebody quitting their job and flipping properties, and they know everything about real estate. There are not a lot of geniuses in this real estate market. Usually bubbles are accompanied by geniuses, right? There's all of a sudden somebody's figured something out. So to me, it's just standard market supply and demand. And eventually that will get fixed. But for right now, it looks pretty fundamental to me. Bill McBride, who I don't have a name, I didn't predict anything, but typically anybody that predicts something that actually happened in the past, there's a pull towards predicting again, right? Because that's where they made their first bet. And so it's kind of like, I struck gold doing this once before. So they tend to predict crashes all the time.
Really?
Yeah. Oh yeah. That's yeah. There's the guy that predicted we should get gold going into the 07, 08. He said that every year since. The gentleman that predicted the last election in the investment circles, he made another prediction for the last election, and the election 2 cycles ago. He made the same prediction because he's like, hey, it worked. I went contrarian. Let me try it again. He was wrong. So it's just human nature. And I'm not even predicting right now. I'm just giving an opinion. I think crypto has crashed. Real estate is just a fundamentally tight market, in my opinion. So
interesting.
I'll give you an example just to ramble on some more. Used car prices. No different than real estate, right? They're very high because there's not a lot of supply, and there's a lot of people wanting to buy cars and rent cars for travel. So those are my 3 cents. Go ahead.
I'm sorry, Maurice.
It's okay. I know it's payback for the glue comment. I know it's payback.
No, it's all good. It's all good. And another thing that people have to keep in mind is when the 07, 08 real estate crash happened, literally, if you had a pulse, you could get a loan. Okay. There were no doc loans, and all sorts of things that just, they do exist now, but they're very limited. Right. So now the mortgage regulations, because they don't want to have another 07, 08 situation. It's very stringent. Literally the day before you close, the underwriter is calling your job to make sure you still have one. Okay. So giving bad loans is not the thing right now. So just to echo what Maurice said, it is definitely a supply and demand issue. And I just feel like as more people get comfortable with selling their homes, there are going to be more homes on the market, so on and so forth. Some of these buyers are just going to decide, you know what, I just can't go any higher. I'm just out for right now. I'm just going to sit it out and I'm just going to wait. So something is going to change. Something is going to shift. Because I'm a realtor, I want it to happen like yesterday. We're waiting it out to see what exactly happens.
Right.
Interesting. All right. So obviously we've had a lot of information in this particular podcast that was pointing towards it crashing, but obviously we don't know for sure if that's going to happen. And on the next part of the series, we will be looking at sources and information pointing in the opposite direction, which sounds like is where you guys are leaning. You guys are leaning no crash, it sounds like.
Right.
Yeah,
I
no
feel
crash.
that way.
Okay. All right. So with all the information given, do you have any advice?
Sure. So the advice I would give anyone in this market is only purchase now if you absolutely have to, because you are going to pay top dollar in most cases.
Mm.
But conversely, if you want to sell at this time, absolutely do it. And shameless plug, I am glad to help you wherever you are in the United States. Just email at info@wilsonwealth.com.
Love it. I love it. What about you, Maurice?
If you can sell high and buy low, which is what Ablavi mentioned, the best example I've seen is clients selling in California and buying in Texas. So if you can make that type of regional switch, then in any market, there is a place to make money and, of course, lose money. And I think the losing bets are definitely on the home buyers, in my opinion. It's a bit overpriced, but that's just Maurice. But if you're selling, hey, you're definitely winning. I mean, rarely is it balanced, but it's definitely not balanced right now. So if you can sell, you're winning the bet right now.
Right.
And that's just the way it is. I mean, you buy a home for a host of reasons other than getting the lowest price possible. So, so if I was a young family out there and we really needed a house and it wasn't too crazy, I eat it and buy. But if I'm just kind of on the fence, like a second home, I'm parking it and waiting.
Right. So I will say, like, slightly off topic, but not really. Looking at statistics the other day, most people who were selling and buying were moving. They were migrating from state to state.
Okay.
So, I mean, would you guys say that this is like a good market to change states if you wanted to?
Yeah, I definitely would agree with that. I know we have an influx of people, coming here to the Atlanta area from out west and up north and things of that sort. So the numbers make sense if you're, coming from California to Atlanta. So yeah.
All right. I mean, that makes complete sense because everybody that I know is just moving state right now. everybody. I mean, I got a few people I know moving to Colorado. I got people moving to California. Like, everybody's moving around. But with all that being said, we will talk about the other side of this topic on part 2, which seems to be the one you guys agree with more. So I'm sure we're going to get some good info on that. Thank you all for listening, and please visit us at www.wilsonwealth.com, on Instagram and Twitter at Wilson Wealth, and on Facebook at www.facebook.com/WilsonWealth for more information about us and the company. We'll see you guys next week on the Wilson Wealth Show.
Bye.
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 Thank you for listening to the Wilson Wealth Show, a thought-provoking show about building wealth in the new economy. Each week, members of the Wilson Wealth team and their guests will discuss how to navigate the world of stocks, real estate, and entrepreneurship to help you build wealth in the new economy. Please join us next time on the Wilson Wealth Show.